Ever feel like managing your money is this constant struggle, like you're always fighting an uphill battle? Well, you're not wrong. It is a battle, but the enemy isn't always who or what you think it is. So today, we're going to pull back the curtain on the real enemies in the fight for your wallet, both the ones you can see and the one that's been hiding in plain sight.
We spend so much time looking at all the external factors, the markets, the economy, you name it. But what if the toughest fight, the most important one, is actually happening right between your own ears? That's really the big idea we're diving into here.
And trust me, this isn't some small skirmish. The battlefield is massive. Just look at this number from the New York Fed. We're talking about over $18.5 trillion in U.S. household debt alone. This isn't just a number on a screen, it's real life for millions of people. And that's exactly why we have to understand what we're up against. All right, so first up, let's talk about the opponent everyone already knows, the big guys. These are the giant economic forces that are pretty much completely out of our individual control. Let's meet our first foe. Yeah, every single day, whether you realize it or not, your finances are in the ring with these three heavyweights. You've got inflation, which is like a silent thief. You've got interest rates, the gatekeeper for both borrowing and saving. And then there's market volatility, the wild, unpredictable storm. Okay, now take a look at this because this is where you really see how sneaky inflation is. It's not just that your morning coffee costs a bit more. First, you've got the loss of purchasing power. It just means your $100 today literally buys you less stuff tomorrow. Then there are negative real returns. That's when the interest your savings account is earning can't even keep up with inflation, meaning you are technically losing money just by standing still. These are the kinds of stealth attacks that can silently drain your wallet. And hey, speaking of interest rates, they are a total double-edged sword. On one hand, if rates go up and you're a saver, great! Your savings account finally starts working a little harder for you. But if you're a borrower, ouch! That very same rate hike makes your mortgage, your car loan, and your credit card debt that much more expensive. It really is a case of one person's gain being another's pain. But here's the twist. As huge and powerful as those outside forces are, they're only half the battle. Now we're going to turn inward and meet the enemy that's often even more dangerous, the saboteur hiding inside your own mind. Let's get into this really wild idea called mental accounting. See, your brain doesn't see all of your money as one big interchangeable pile. Nope. It loves to create these little mental buckets. This is vacation money. This is bill money. This over here is the fun money. And the crazy part is, you treat each of these buckets as if they're totally separate and can't be mixed, even though it's all just money. And this isn't just some weird little quirk we have. As the Nobel Prize winner Richard Thaler points out here, this internal accounting system we all have running in our heads, it can push us to make some really unexpected and, let's be honest, often totally irrational decisions. And this example, oh, it just hits the nail on the head. I mean, think about it for a second. Saving $5 is saving $5, right? But in your small office supplies mental bucket, saving $5 on a $15 item feels like a huge win. It's a 33% discount. But in your expensive clothes bucket, saving that same $5 on a $125 jacket feels like nothing, so you don't even bother. Same $5, completely different decision. That is mental accounting in action right there. All right, here's another mental trick we all fall for. We all kind of know this, right? Swiping a little piece of plastic just feels less real than handing over a crisp $20 bill. But why is that? Well, it all comes down to something called the pain of paying. With cash, the pain is immediate. You feel it. You see that money physically leave your hand. But credit cards, they're like financial ninjas. They delay that pain until the end of the month, and they bundle that $5 coffee into one giant bill with everything else. The sting is gone, which makes it dangerously easy to overspend. Okay, so we're fighting these giant forces out there, and we're fighting these sneaky biases inside our own heads. It sounds pretty overwhelming, right? Well, this is where we start to fight back. And your first line of defense is your armor. It's knowledge. And the very first piece of that armor is what we call economic literacy. And look, this isn't about needing a PhD in economics. It's simply about getting the fundamentals, understanding how inflation really works, what compound interest actually means, and maybe most importantly, being able to spot those mental biases we were just talking about in yourself.
And the good news is, building this armor is more accessible today than it has ever been. We're talking about everything from classes in schools to adult workshops, online courses, and even the budgeting apps right there on your phone. But honestly, that last point on the list, that's the real game changer, getting a handle on behavioral economics. That is how you flip the script on your own brain. You start to see the tricks before they can trip you up. All right, so knowledge is your armor. That's your defense, but you can't win a fight just by blocking punches, right? You need a sword. You need active strategies to get on the offensive and really start building your financial future. And probably one of the most powerful weapons in your arsenal is diversification. You've heard the saying a million times, don't put all your eggs in one basket. Well, this is exactly that. By spreading your investments across different kinds of assets like stocks, bonds, maybe even some real estate, you build yourself a cushion. So if one area takes a hit, another one might be doing just fine. It's your best defense against that market volatility giant. Now, for a more specific tactic called bond laddering. I know it sounds super complicated, but stick with me, it's actually pretty straightforward. Instead of putting one big chunk of money into one single bond, you buy several smaller ones that mature at different times, like rungs on a ladder. This gives you a steady stream of cash, and here's the really key part, it lets you reinvest your money at new, hopefully higher interest rates as each rung of your ladder matures. It's just a really smart way to stay flexible and adapt. And this right here is a perfect picture of threat versus defense. On the left, you've got the threat. More and more people are falling behind on their debt payments. But on the right, that's your shield, keeping your own debt-to-income ratio at a manageable level. It's a great visual reminder that even when the economy gets stressful, it's your personal financial metrics that really protect you. So what about inflation, that silent thief we talked about? Well, you are not defenseless. You have an entire arsenal of weapons you can use to fight back. We're talking about things like TIPS, those are Treasury inflation-protected securities, and I-bonds, which are literally designed by the government to keep pace with inflation. Plus, other assets like certain stocks or real estate also tend to do well when prices are on the rise. The point is, you have options. You don't have to just sit there and watch your money's value disappear. So when you step back and look at the whole picture, the biggest takeaway is this. Winning with money isn't about one single lucky event. It's not a lottery ticket, it is a long-term sustained campaign. You have to fight a war on two fronts, keeping one eye on the economy out there and the other eye on the tricky biases in here. At the end of the day, you are the general in this battle. You've got the armor of knowledge, you've got the sword of strategy. The forces outside are always going to be there, and that saboteur in your brain is always going to be clever. But the battle for your financial future, it is absolutely yours to win. So the only question left is, what's your next move?